Hey guys, thank you for being here. My name is Martin Perdomo. I go by the Elite Strategist. And first and foremost, I want to thank you for being here and showing up to this event, showing up for yourself. You showing up is a testament to your commitment, to your personal development and your growth. And thank you, New View, for allowing me to be here and sharing with your members of your tribe and your clients and your team. Thank you so much. I'm really grateful for that. And I'm really grateful for you and your time and your attention, as I know that the most important thing that we have is our time. So guys, today I'm going to be sharing with you the reasons why I like investing in multifamily, why it's my favorite asset class as an investment class in multifamily. And before I get started, I like to get started by sharing a quick story with you, if I may. And this is a story of this man on this horse, right? So now I want you to picture this. There's this man galloping down the street in this big, beautiful horse. And he's a really handsome, good-looking guy, right? Really handsome, and he looks like he's going somewhere important. He's groomed very well. He's dressed very well. He's just very well taken care of in this beautiful, beautiful horse. And he's galloping down the street, galloping down the street, galloping down the street. And this man on the sidewalk looks up at him and says, excuse me, sir, where are you going? You look like you're going somewhere important. And I'm just curious, where are you going? And this man looks down at this other man on the sidewalk and he says, I don't know. I'm going wherever the horse is taking me. And see, this is how most people treat their investing. This is how most people go through life, per se, right? Most people go through life just letting life and their habits, their investment habits, just take them wherever it is going to take them without actually having clarity and taking decisive, with purpose action, right? And I always like to start whenever I'm doing a presentation with a story like that. I think that's a really good story, and I think that's adequate for what I'm about to share with you. So guys, I'm going to give you 5 reasons why I like multifamily investing, okay? And reason number 1, I'm going to use this board to write down. Reason number 1 is, my favorite one is, my clients love this, is because I'm able to give them this, okay? And that's, I'm able to give them above average returns. That's one of the biggest ones to me as an investor. I'm able to get above average returns for myself. I'm able to get above average returns for my clients through multifamily investing. So you may be wondering, how do you do that, right? How do you do that? Well, we do that because we specialize in finding the right deals. We know how to run the numbers. We look for deals that are mom and pop, okay? Mom and pop, undermanaged, underperforming properties. So I'll give an example of that. So we have a property we actually just bought, and it's a small one, it's not a big one. It's an 11 unit, and this was a husband and wife. Husband died, wife inherited, but the wife is not the entrepreneur. This was the husband's game. It wasn't her game. So she put it on the market, and there was a ton of value add here. The rents were $200-300 under market performing. Under market, it was not performing. It's dirty. It's just, and those are the type of deals we look for. We look at the market. There's job growth there. There's a demand for rents there. The schools are good. There's certain things that we look at, and that we can go in there, increase the rent, add the value, remodel the property, and give our investors and ourselves above average returns, right? So we buy it, we fix it, we increase the rents, we then refinance it, give our investors back their money, or take our own money out of the deal again, keep cash flowing the property, and then in year 5 we sell the property, dispose the property. But by this point we have forced appreciated the property, and now the property is 2, 3, 4, 500,000, depending on the size of the property, worth more. So boom, our shareholders get to participate in those returns. Awesome. This is the first reason I'm gonna tell you. This is the main reason why I love this, and I'm gonna share this with you. I'm Latino, right? I was born and raised in New York City, and we came from nothing. I came from nothing. And when I was 16, my mom put me out. So picture, I'm a 16-year-old kid living in New York City. If you've ever visited New York, I was born and raised in Washington Heights. So that's all the way uptown, right? That's the hood, all the way uptown. My mom puts me out. I'm 16 years old, have nowhere to go. I'm sleeping in trains. I'm sleeping in the beach. I'm sleeping in rooftops. Luckily, it was the summer. Sleeping in rooftops, I'm sleeping in parks. And I quickly realized that without housing, the two most important things in life are housing and food. I quickly realized that, right? And I made an unconscious decision that I was going to buy real estate. That's when I first fell in love with real estate, was because of my pain, of my own through my own experience in life of not having. So I want to share that with you because I understand the importance of housing, right? And I'm going to which leads me into reason number 2, okay? It's a real asset. Reason number 2 is the reason I like real estate is because it's a real asset. What does that mean, right? When you invest in the market, in the stock market, it is nothing against the stock market. The stock market, the challenge with the stock market is you don't have much control over that. It's very volatile. It's some company somewhere with some CEO, with some boardroom that you don't really have much say. There's a lot of volatility, right? It's very emotional. Right? It's very emotional to what's happening and what the news is giving and all of that stuff, right? This is a real asset. One of my first mentors in real estate is this woman by the name of Kathy. And she lives in my local town. She's one of the wealthiest people in this town, right? So I rent my office from her. And one day we go out to lunch as we usually do, and I tell her, hey Kathy, one day we're having lunch in this beautiful little cafe here in town, and I say, hey Kathy, her and her husband started, just so you get a little note, her and her husband was an attorney, and her husband was just buying real estate, multifamily, commercial, and they've built this mini empire. They have 189 units in town. Again, like I said, one of the wealthiest families. And one day we're sitting down and I'm talking to her and I say, hey Kathy, I got a question for you. Why real estate? Why real estate, right? And her answer to me was one that has stuck with me. And is the reason I just told you. She says, Martin, I like real estate because when my husband and I decided to buy real estate, he said to me, which is her philosophy, he said to me, it's a real asset. She goes, if the market is down, the stock market, in a recession, she goes, I can walk up to my property, I can touch it, I can feel it, I can knock on the door, and I can get an exchange of money for this real asset I have. I want you to think about that. It's a real asset, right? It's not a piece of paper. It's not a stock. It's a real asset that you have. And God is not making any more land, right? God's not making any more land. So this is why reason number 2 why I like real estate. Again, same reason my mentor told me, because it's a real asset. It's a real asset class. It's not some hocus pocus thing somewhere, some company somewhere. And I have nothing against that. I own shares and I own stocks too, but this is my favorite asset class, is real estate. Okay, number 3. Go to number 3. Number 3, this is an important one. There is less volatility in the market. Volatility, I'm sorry, my spelling. Less volatility. So there's less volatility in the real estate market. It's more consistent, guys. When we look back at 2008 and 2009, I'm a data guy. I have to be a data guy if I'm going to be a real estate investor. When I look back at 2008, 2009, as to what happened there, in 2008, we had a 0.4% decrease in rents. In 2009, we had a 4.1% decrease in rent. And then in 2010, we bounced back, and by 2011, we were above where we were in 2008. So it's less volatile, right? It's much less volatile. It's a much more consistent investment. There's always a demand for real estate. There is always a demand for rental, I'm sorry. There's always a demand for rental. During recessions, people are either underwater or they lost their jobs, they have to downsize. So what happens to rental? There's a demand for rents, right? There's a demand for rentals. In turns, what happens to us as investors that own rents go up, right? The demand goes up, prices go up, supply and demand, right? So there's a demand for rental. Now the other side to that is, because there is another side to that, is that at the beginning of a recession, there may be an influx of rentals, so then there's got to be an adjustment for rentals, right? Because now there's a demand, there's a supply increase, so we have to adjust a little bit. But long term, when you look at the data, it is this asset class, multifamily, is a recession resilient asset. I don't like to say recession proof, I like to say recession resilient asset, because no matter what happens, guys, no matter what happens with our economy, recession, depression, doesn't matter, people will always need a place to live, right? People will always need a place to live, and they will always pay their rent first and foremost, right? So we're experiencing some historic challenges right now in our economy with this eviction moratorium as we speak, right? And which we can't evict anyone through December 31st, 2020. We're not allowed to evict anyone, so that's new, that's different. However, there are certain rules and certain things. But my point is that it's less volatile, it's more consistent income. No one wants to live in the street. Oh, and one more thing is that no country ever wants to have a country full of homeless people, right? The governments are always going to figure out a way to house people. When COVID-19 happened, and I'll share this story with you. When COVID-19 first happened in March, when it first happened, I had made a decision, and my decision was I thought and I saw a recession was coming for this, obviously, right, because of the shutdown. And it's not my idea. I listened to a lot smarter people than myself, right? And in 2008, the last recession, I was in real estate. I was an investor. But I didn't know what I didn't know, and I had a lot of growing pains, and I suffered a lot, and I went through some challenges. But when COVID happened, I decided, when it first happened, the pandemic first happened, and the relief bill came out, what I did was I came in my office, I printed all 880 pages of this bill, and I read the whole thing, and dug in this bill. A lot of people don't know that. Dug in this bill, there's $50 billion that's going to be allocated for housing, because Congress figured that if there is a housing crisis, which there might be, we don't know, no one has a magic ball, right? A lot of crazy things have happened in our economy since then. If there is a housing crisis, there's money in the stimulus bill for that, to take care of housing. So just want to share that little note with you, because a lot of investors don't know that. I do, because I study this stuff and I read the whole bill, and I'm committed to growing. I'm committed to winning. I'm committing to winning at all costs, regardless of what's going on in the market. I believe, my mantra and our belief in our team is that we create our own economy, we create our own opportunities. We're the ones that make it happen. All right. So again, going back to that, is the governments don't want any. No government wants a country full of homeless people, right? That makes sense, right? So number 4, okay. Number 4 is, this is another one that I love, okay, is the tax advantages that we get through real estate investing. The depreciation that you can take through real estate investing. So we can accelerate depreciation through something we do on bigger assets called cost segregation, where we itemize everything that's depreciating. We bring someone in, an expert in, and it's just a great tax advantage. So if you invest with a group like ours, or someone invests, our investors that invest with a group like us, they get to, when we do a cost seg, they get to share on the depreciation that's done through the cost segregation. And now you can take that depreciation and write it off towards your job, your business, your active income, and it's a beautiful thing. I mean, it is a great thing this is one of the main reasons I love real estate. I love multifamily. And why multifamily? I want to touch on this real quick. Why multifamily over single family, over smaller asset class? We like 50, 100 units. We like bigger units, right? Why multifamily? When you're playing in the single unit space, or you have a portfolio of single unit, that's fine. But we like economies of scale, right? Economies of scale. If you have a single unit or a duplex, and you have one vacancy on that single unit, because it's not if, it's when, or you have an issue with a tenant where you have to evict them for non-payment, or whatever the reason is, right? And you have that issue and you have a vacancy, what do you have if it's a single unit? You have 100% vacancy. So the business is carrying the cost of the taxes, insurance, and all of that stuff that comes along with that. Versus when you have a bigger building, the bigger you go, the less riskier it is. Think about that. So it's a little bit challenging for some people, because some people think that the bigger they go, the more risk it is. Actually, it's total opposite. The bigger your asset, the lower the risk. I'll say that again. The bigger the asset, the lower the risk. Why? Because if I have a 50 or 100 unit, if I have a 100-unit apartment building, and I have 1 or 2 vacancies, what do I have? A 2%, right? I have a 2% vacancy. I have a duplex, and I own duplexes. I own a bunch of duplexes, but when I have one of those duplexes, I have a vacancy. What do I have? A 50% vacancy. So you see the numbers. This is another one of the reasons why we love multifamily. We love it. We love bigger, better. So tax advantages. The tax advantages are absolutely amazing. Love the tax advantages that we get. And then I just kind of mentioned this one, which is the leverage, right? I mentioned this one in leverage with multifamily. So again, I just said that, and that's the economies of scale. It allows us to be leveraged with 100 families versus 1 or 2 families, right? And so here's another one of the reasons why we like this class. So I have a podcast, Latinos in Real Estate Investing podcast. Check that out. I'm constantly educating. Check out my website, StrasburgREI.com. That's my real estate investors group website. I host local monthly meetups for real estate investors where I'm educating on different things on real estate. If you want to learn about real estate, you can go there and check out my podcast, check out my all of my courses. I have a bunch of stuff there on that website. That's StrasburgREI.com, and you can see my content there. If you like to learn how to invest passively with our group, okay, you can go to StrasburgREI.com as well and watch a short webinar, and we show you the kind of returns that we get. But before I let you go, I'm going to leave you with this. I teach a lot of people, hundreds. I've trained and mentored thousands of people. And here's what happens with a lot of guys or gals, doesn't matter. They come into investing and they're doing well, or they're buying single families and they're flipping, or they're buying duplexes and they're renting it, or whatever their strategy is. And for some reason, they get in this mindset that they have to own a certain amount of single families, or they have to do a certain amount of rentals, they have to own a certain amount of small properties before they can go and scale to something bigger. And that is a mindset. I'm a big mindset guy. That's a mindset challenge. Because no one says that you have to own a bunch of little properties before you grow up and go to the next and go to 50 or 30 or 20 or even 6 units, right? But what happens is, because people think that bigger is riskier, because we're taught that way, we're taught to think, hey, bigger debt, bigger risk, right? Bigger is riskier. It's actually the total opposite in multifamily. The bigger the asset, the lower the risk. Remember that. The bigger the asset, the lower the risk. Guys, I hope you found value in what I just shared with you. These are the 5 reasons, my five top reasons why I love investing in multifamily. Again, if you want to learn how to invest with my group, go to StrasburgREI.com and go to Partners with Us, and you can see a short webinar there. My business partner, Dr. Danielle, and I, where we show a sample deal. And you can schedule a call with me, a 30-minute call right there. There's a Calendly link. You can get on my schedule. and we can get on a quick call if that's what you like. Again, guys, thank you for watching. Really appreciate you guys, and I hope to see you guys soon.